Good morning, everybody. Welcome to the daily digital download for June 15th, Monday. Just making it through the week, making it through the month, making it through the year. We are in a good moment right now. Prices are currently in a trend upward for tokens. There were some good macro level news over the weekend. The US has basically said it's made a peace deal with Iran. So we now have less macroeconomic uncertainties acting as headwinds for the cryptocurrency and digital asset class. There's still other things to be concerned about: inflation, quantum risk, AI hacks, but this is one less thing to worry about. Congratulations to us. And as is such, the price of tokens is up today. But we will not dwell on that because I'm not a very good trader. I don't quite like talking about token prices because there's not much you can do about it. It goes up or it goes down, and you guess either one way or the other, and you're right or you're wrong. Anybody who tells you that they can predict which way things are going to go is full of it. Markets are irrational, and they can stay irrational longer than the investor can remain solvent. Well, June is continuing to be a bit of a slow and quiet month, one could argue. There haven't been as many hacks that took place in April and May, which is nice. That's not to say we aren't seeing any. There just haven't been as many. And the news on Friday, Saturday, and Sunday was particularly quiet, which is nice. It's nice to have quiet news during bear markets because that just means there's less bad things happening. All right. The Bitcoin difficulty has dropped 10% in 2026, once again, and this is the second largest negative adjustment of 2026. It has fallen from 138.96 trillion to 124.93 trillion at block height 953,568. This is the 11th largest downward move in blockchain and Bitcoin's network history, and it's the second largest drop of 2026. The first drop happened in February of this year as a response to the Texas mining grid and the cold weather snaps we're having across the US, where more or less Bitcoin miners had to shut down so that more power and energy could go to homes and businesses that needed the electricity. The best explanation I can give for why we've seen Bitcoin's difficulty drop this much in 2026 is price. What is Bitcoin mining difficulty? It measures the computational work that miners need to do using their GPU chips to perform block additions to the blockchain. The latest cut to difficulty follows a 15% decline in Bitcoin's price so far in June, which is compressing miner margins and prompting operators to shut off unprofitable machines. This comes amidst a slew of Bitcoin mining farms that turned off their Bitcoin miners in Q1 and Q2 of this year and started providing AI services. That being said, Bitcoin's network has normalized after the cut. Average block times are back near 10 minutes. And this is why this is a big deal, because while Bitcoin is currently trading at roughly around $64,000, actually, this article is old. It's trading at around $67,000 right now. But that doesn't really matter because the spot price is still well below the production cost of each Bitcoin that's being generated. even if Bitcoin is trading at $67,000, the current cost to produce, to mint a new Bitcoin, according to the amount of miners and the arithmetic that's necessary to get to this number, is each new Bitcoin costs around $84,300 to mine, to create. And currently, miners are sitting at a loss when they have to sell their Bitcoin to pay for the facility that they use to lease, to pay for the hardware that they use for their infrastructure, to pay for the electricity and energy that's consumed to run these mining units. So, long story short, they're operating at a loss. They're mining underwater on an all-in economic basis across much of the network. The difficulty cut will likely improve the relative economics for miners using newer, efficient equipment, though higher cost operations may struggle to close the gap. And this is just an ongoing trend that we've seen this year. A couple weeks ago on the Daily Digital Download, we covered the Bitcoin mining companies that pivoted to AI. They were all reporting positive revenue in Q1 and Q2 of 2026 so far. So unfortunately, those who had, in hindsight, those who had the foresight to point their infrastructure towards another vertical were right. And honestly, it's just still looks like more pain for the Bitcoin miners. And this is a huge Bitcoin mining difficulty adjustment, 10%. Incredible. That being said, we have some bullish news about Bitcoin, but we'll get on to that in a bit. The next piece of news I want to cover is important because in 2025, as I was taking a look at what's going on in blockchain and crypto, it became obvious that LATAM as a region and other countries around the world in general need to use blockchain rails for remittances, to use blockchain to reduce the fees and the costs of sending money between different countries. Here in the US, we have a lot of immigrants from LATAM, which is Latin America. And, you know, when you migrate to another country, it's to have a better life. And so folks who migrate here without a college degree or very much education, oftentimes they're getting low-paying jobs. That being said, whatever money they're able to send back home means a lot to the folks who live back home. Even, quote, even if you're only able to send a couple $100s back a month. Well, using the current infrastructure and the current rails, something like Western Union, if you're sending back $100 or $200, Western Union could eat up to $25 in fees, which could be 12.5% to 25% of the money you're sending back being eaten, being stolen by fees. There are parts of the world where $25 a month could feed somebody for the entire month. And so this is the biggest killer use case to me for what blockchain and crypto can offer. Disintermediating third parties that are middlemen and just take a piece of the pie, take a cut of the transactions and the activity that's happening on the network. And so last year, I went to LATAM a couple times actually, just to see what is happening with crypto on the ground and how the folks of different countries throughout the southern half of the American continent view and use blockchain and crypto. And so I thought that this news was really interesting because Paradigm, Coinbase Ventures, and Verida Ventures are part of a group that invested $9 million into a LATAM-based payments app, Sayama, called Dorado. This was a Series A financing round, and the Paradigm team said, quote, cross-border payments in LATAM represent one of the most underserved and underreported opportunities in global finance. The region moves well over $100 billion across borders annually, but is plagued by slow, expensive, and opaque infrastructure. El Dorado is building the payments layer this market has long needed, end quote. That being said, El Dorado co-founder and CEO Guillermo Goncalves, muy interesante apellido, put the cross-border payment market in LATAM closer to $1 trillion per year, and said that the region still lacks effective payment rails necessary. If you go to LATAM, a lot of the countries locally are using kind of bank rails 1.5. I wouldn't quite say that they're upgraded yet, but if you're in Mexico and you want to go pay for food at like a vendor or a stall, you'll be able to do so using a mobile phone and using the bank system to basically do QR scans with your phone and be able to make a payment to like a grandma who just has access to a cell phone. In Argentina, something similar. Brazil, something similar. All of these countries have ways for you to pay digitally using your bank accounts locally. But the problem is how do you get funds into and out of the countries? And so that's kind of what this solution is offering. El Dorado has onboarded over 100 new business clients, and the main use case so far has been for importing electric vehicles from China. That doesn't help America, but whatever. Not too big of a deal. The new business payment service is being built on Tempo, which is one of these corpo chains that a lot of people on CT will love to hate because it's not quite decentralized. That being said, I mean, like, look where the puck is going and go skate to it. A lot of these entities are onboarding onto Tempo, onto Canton, onto pseudo private chains that more or less have validators that were pre-approved. And that says a lot because Tempo was incubated by Paradigm and Stripe. And so maybe that's a part of the investment terms of the deal, that El Dorado needs to integrate support for Tempo. In total, El Dorado operates in 12 countries, including Argentina, Bolivia, Brazil, Colombia, Costa Rica, Dominican Republic, and Ecuador. So super cool to see that. LATAM is a region that folks should be paying attention to when they're looking at what's next for integrating blockchain technology at an international scale. The cracked Coinbase quantum research team has flagged millions of Bitcoin that are at risk from quantum computing. They say roughly 7 million Bitcoin sit in addresses that are exposed to future quantum attacks. And much of that exposure is not lost Satoshi era coins, but rather active funds that include cold wallets that are operated by known exchanges. The board has split exposure into two buckets. The first compiles about 1.7 million Bitcoin, which sits across roughly 20,000 P2PK addresses. And that's pay to public key addresses, where the public key itself is the address and is fully visible on chain, leaving those coins directly vulnerable to future attack. P2PK was basically when you received a Bitcoin from a sender, then your public address was already shown on chain. After P2PK, later cryptographic mechanism schemes that were embedded into Bitcoin would not show your public address if you received Bitcoin, but rather until you sent it. So that's why there's a smaller bucket of addresses that are at risk from this cryptography mechanism. And many of these 1.7 million Bitcoins are assumed to belong to Satoshi Nakamoto. or to owners who lost their keys long ago. RIP to those who have computers sitting in dumpsters, or to those who got into boating accidents while they were holding their ledger. The second and larger bucket is the one that's tied to address reuse. So a Project 11 report, which is a quantum security group dedicated to securing Bitcoin's future, put about 5 million Bitcoin at risk because of public keys that have already been revealed, and says that most of those coins are assumed to belong to active users rather than lost wallets, with large amounts sitting in cold wallets of known exchanges or showing recent activity. And again, note here where it says because their public keys have already been revealed. This is the threat that quantum computing is going to make against Bitcoin. Once your public key has been exposed, there is potential for quantum computers to deploy their qubits, their cost of compute, toward deriving your private key that can be extracted from your public key. So long story short, the big threat that quantum has with Bitcoin is once your public key has been exposed to the network, then these computers can go after those assets and can steal them from you, either from a long-range attack or a short-range attack. The short-range attack would be in 9 minutes or less, where the malicious actor can basically change the receiving address in the mempool for when somebody sends a Bitcoin. And so let's say you send it to an exchange or to a friend. The malicious actor can change the receiving address if it knows the sending public address in 9 minutes or less. The long-range attack is basically just assets being stolen from wallets that they're sitting in. Between the two, the report describes intermediate proposals that are mutually compatible, and so we'll just talk about three real quick. An hourglass design would cap how many P2PK coins can move per block to prevent a sudden supply shock. The draft BIP 361 proposal would bar legacy signatures after a set time, but let the users prove ownership with a quantum-resistant ZK proof as an option available to wallets generated from seed phrases, so you can move that frozen Bitcoin, or provable address controlled timestamps, or PACTs, originally proposed by Paradigm researcher Dan Robinson, which would let holders commit today to a future quantum safe transfer without publicly moving funds on chain. I do want to highlight that at the moment, there are no set in stone solutions that will be chosen as the way forward by the Bitcoin community, the Bitcoin developer community. And this is the big problem with quantum security in Bitcoin. Bitcoin takes forever for new features to be added into the core code, which has long been seen as a feature, not a bug. But the problem here is that the earliest estimates for when quantum computing will arrive is 2029, less than 3 years away. And the glacial pace at which Bitcoin development operates dictates that even if there's a solution chosen today, that the time it would take to implement into Bitcoin core code is still too long to meet even the most aggressive timeframes for how soon we could have quantum computing. The board declined to say that any of the three choices we just went over, are the best single approach, and that there is no correct answer. The community must decide. The report made two recommendations, urging developers to start technical migration work now, arguing that building post-quantum signature support is independent of the abandoned coins fight, and we should not wait for it. And the group also called for a clearer communication so users are not left guessing about timeline and plans. The board stressed that no quantum computer can break blockchain cryptography today, now, and that the government's debate will each take years to resolve. So waiting until a cryptographically relevant quantum computer actually exists would be too late. And this is the threat that quantum computing has today. We don't know if it comes in 3 years, we don't know if it comes in 30, but we need to be ready. And the conservative estimates state that we need to be building today for this future that is forthcoming. Because it's not like we're going to have a linear line where we can say in 18 months, where X, Y, and Z builds are getting us closer to quantum computing. It's going to be more like an exponential curve. And by the time we have our first quantum computer that is live, that can perform one of these attacks, we're not going to see a piece of news that says quantum computing is here, your Bitcoin addresses can be hacked. We're going to wake up one day to seeing a news article similar along the lines of all of the Satoshi era Bitcoins have been moved, quantum computing is here. And so this is the way that we're going to wake up one day to the news. And so this is why it's a big threat and why it's also difficult, because we don't know when it's coming, but when it does come, it's going to be hellacious. Moving on to our second to last piece of news. The CFTC has sued its sixth state in its latest move to authorize itself as the federal regulatory body for sports betting markets. Over the past few months, the CFTC has sued Wisconsin, Illinois, Arizona, Connecticut, and New York, and today, New Mexico has joined the fight as the state sued Kalshi for illegally offering sports betting to its residents. This marks the CFTC's latest move to assert its jurisdiction over prediction markets, specifically over sports betting, as the fight continues over whether states or federal government has jurisdiction over these contracts. There's not much to say other than this fight continues to grow, and the CFTC is emboldened and empowered by the administration right now, because the Trump administration is saying that this is the CFTC's purview, this is the CFTC's realm, and they are the ones who deserve to monitor and regulate this class of financial derivatives, is the best way to put it. That being said, I've argued in the past that while I agree there should be a federal regulatory body that oversees more broadly how these types of markets are deployed, we also have to respect that on a state-by-state basis, there are varying spectrums of conservatism. Like, for instance, a red state might not want gambling because maybe that red state has a lot of affiliations or ties to religious groups. And if religious groups don't want communities more broadly to be gambling or doing degenerate things that are not in the Bible or any religious text, it should be their prerogative to state that they don't want their citizens doing that. Now, is the government supposed to be able to step in and say what an individual can or can't do? The libertarian would say no. The liberal might say the government is protecting them. And the conservative would say it's the government's role to protect citizens as well from being exposed to sinful or potentially harmful activities. I personally land on the side that every individual, every adult should be able to make their own individual choices. And as long as something is not impeding another person or hurting or harming them, then no external entity should step in. But I'm not a regulator. I'm not a policymaker. I'm just a guy who talks on a microphone 5 times a week and hosts a couple podcasts and writes about a blockchain ecosystem more regularly than not. So what do I know? All right. Despite the fact that we saw Bitcoin mining difficulty go down and some more quantum risk, Saylor has continued to buy Bitcoin. He bought another bought another 1,587 Bitcoin for around $100 million. Strategy's holdings now are around 847,000 Bitcoin. Remember when he sold 32 Bitcoin 2 weeks ago and the market actually freaked the F out? Well, after he sold those 32 Bitcoin, they've bought 3,000, more than 3,000. How foolish were we for freaking out? Between June 8th and June 14th, Strategy acquired 1,587 Bitcoin for an average price of $63,024 per Bitcoin, which now equates to more than 4% of Bitcoin's total supply being held by Strategy. And then the last piece of news is, in addition to Strategy, Tom Lee and Bitmine bought yet another tranche of ETH. Bitmine, I guess the coffee just does not want to kick in this morning. They increased their Ether treasury to 5.62 million ETH tokens, giving control to 4.66% of the total market cap of ETH. They bought 76,881 ETH over the past week, and Bitmine is now 93% of the way to owning 5% of the total ETH supply. They want to own 5% of the total 120.7 million token ETH supply. Tom Lee said, quote, "This is not surprising, given we believe we are in the early stages of crypto spring. Bitmine is expected to reach the alchemy of 5% sometime in 2026, end quote. Bitmine is not going to stop buying. They will continue to buy ETH, and they will do so at a pace that is sickening to the rest of us." All right, folks. With all that said, thank you so much for tuning in to today's Daily Digital Download. As always, if you have not yet, please subscribe to our weekly newsletter at thesmarteconomist.beehive.com and take care of yourself. It's going to be a great week. We've had a great weekend of World Cup soccer, of World Cup football. I hope your teams are winning. And if your teams are losing, I hope you're not heartbroken. With all that said, we'll catch you guys tomorrow. Have a safe and fun